What is whole life insurance? When the insurance world meets someone new to insurance, it can be a very big deal. Welcome to Insurance Reassurance, and today we are going to answer the question of, you guessed it, what is whole life insurance? For this topic, the information will be centered around the insurance of life and what the difference is regarding the many different types of life insurance available to you. This may include permanent life insurance, also referred to as traditional life insurance, universal life insurance, indexed life insurance, or variable life insurance, just to name a few, as this is information we all may need to know at one point of our life. So with that being said, let's get started. Whole life insurance provides coverage to the life of the insured. In addition to paying a death benefit, whole life insurance likewise contains a savings component in which cash value may accumulate. These policies are otherwise called permanent or traditional life insurance. Whole life insurance policies are one kind of permanent life insurance. Universal life, indexed universal life, and variable universal life are other kinds of life insurance. Whole life insurance is the first life insurance policy. However, whole life doesn't include permanent life insurance. Key takeaways. The key takeaway here is that whole life insurance goes on for a policyholder's lifetime rather than term life coverage, which is for a specific amount of years. Whole life insurance is paid out to a single beneficiary or multiple beneficiaries upon the policyholder's passing, given that the premium payments were maintained. Whole life insurance pays a death benefit, yet has a savings component in which cash can develop over time. The savings component can be invested. Also, the policyholder can get to the money while alive by either withdrawing or borrowing against it when required. Understanding whole life insurance. To better understand whole life insurance, you must understand that whole life insurance ensures payment of a death benefit for beneficiaries in return for level, consistently due premium payments. The policy incorporates a savings portion called the cash value close by the death benefit. In the savings component, interest may collect on a tax-deferred basis. Developing cash value is a fundamental part of whole life insurance. To construct cash value, a policyholder can transmit payments more than the planned premium. Furthermore, dividends can be reinvested into the cash value and earn interest. The cash value offers a living benefit to the policyholder. Basically, it fills in as a source of equity. To get to the cash reserves, the policyholder demands a withdrawal of funds or a loan. Interest is charged on loans with rates varying per insurer. Additionally, the owner may pull out funds tax-free up to the value of total premiums paid. Loans that are unpaid will reduce the death benefit by the outstanding sum. Withdrawals reduce the cash value, yet not the death benefit. The death benefit is normally a set amount of the policy contract. A few policies are qualified for dividend payments, and the policyholder may choose to have the dividends buy extra death benefits, which will expand the sum paid at the time of death. On the other hand, unpaid outstanding loans taken against the cash value will decrease the death benefit. Numerous insurers offer riders that protect the death benefit in the occasion the insured gets debilitated or critically or terminally ill. Ordinary riders incorporate an accidental death benefit and waiver of premium riders. The named beneficiaries don't need to add cash received from a death benefit to their gross income. Nonetheless, once in a while the owner may assign that the funds from the policy be held in an account and distributed in allotments. Interest acquired on the holding account will be taxable and should be reported by the beneficiary. Additionally, if the insurance policy was sold before the death of the owner, there might be taxes assessed on the returns from that sale. Similar to the case with any sort of permanent policy, it's critical to altogether research all companies being considered to guarantee they're among the best whole life insurance companies presently operating. Example of whole life insurance. Now here we can go into an example of whole life insurance. For insurers, the accumulation of cash value diminishes their net amount of risk. For instance, ABC Insurance gives a $25,000 life insurance policy to S. Smith, the policy owner and the insured. Over the long run, the cash value adds up to $10,000. Upon Mr. Smith's death, ABC Insurance will pay the full death benefit of $25,000. However, the company will only realize a loss of $15,000 due to the $10,000 accumulated cash value. The net amount of risk was $25,000, yet at the death of the insured, it was $15,000. History of whole life insurance. Wondering what whole life insurance is can be one thing, but wondering how long whole life insurance has been around is a whole other story. From the end of World War II through to the last part of the 1960s, whole life insurance was the most popular insurance product. Policies secured income for families in case of the inconvenient death of the insured and helped subsidize retirement planning. After the passing of the Tax Equity and Fiscal Responsibility Act, also known as TEFRA, in 1982, numerous banks and insurance companies turned out to be more interest sensitive. Individuals measured the advantages of buying whole life insurance against putting their investments in the stock market, where annualized return rates for the S&P 500 were adjusted to inflation, 14.76% in 1982 and 17.27% in 1983. Most of the people at that point started putting investments into the stock market and term life insurance as opposed to whole life insurance. And that brings us to the end of this video. So, what do you think of the whole life insurance tips we've outlined in this video? Which videos do you want us to create next? Let us know your ideas in the comment section below. And don't forget to hit the like button and subscribe to Insurance Reassurance for more. Thanks for watching, and we'll see you next time.